What's up, everybody? Welcome to Heresy Financial. This is the channel where we talk about financial topics in a way that's considered heresy to the financial establishment. Today we're going to be diving into the truth about Bitcoin. Is Bitcoin safe? Is Bitcoin the future of money? Or is it something you should avoid like the plague? Let's dive in. Alright guys, if you're new to the channel, what we do here is we talk about financial news or topics or advice or investing guidance, things that you're not going to hear from your typical financial advisor or your typical financial guru out there. We're going to look behind the scenes, look at what's really going on and ways that you can prepare yourself for the coming financial crisis. One of the hot topics today is Bitcoin, and along with Bitcoin, just cryptocurrencies in general. A lot of discussion about it today, so we're going to dive in and we're going to look at both the pros and the cons of Bitcoin so that you can make a decision yourself on whether it's something that you want to dive into. Before we get into the pros and cons of Bitcoin though, we need to cover a few basics. What is money? What is an investment or an asset? And what is a speculation? This will help us lay a framework for how to understand Bitcoin moving forward. Okay, so what is money? There are three ways that money is defined. The first way is that money is a store of value. Now, basically, it is deferred purchasing power. That's how you can understand money. Money is just a place to store your wealth or your purchasing power until you actually need to use it. This means that to society, the value of money comes at the point of transaction because that is when wealth and value is exchanged. Which brings us to the second definition of money, which is that it operates as an exchange of value. Now, something can be used as money as long as it is used to exchange wealth or value between two parties. Now, anthropological evidence shows that there never was a society in history that existed that used barter as the main means of transaction. Explaining the existence or the evolution of money through the origins of barter is more a useful explanatory tool that economic textbooks all the way back to Adam Smith's The Wealth of Nations has used, without any direct evidence or quotation or pointing to any society that has ever existed that used barter as an actual means of exchange. It helps the framework, but we know from archaeological and anthropological evidence that money and debt was always used and not barter. And so money itself is the way that value and wealth is exchanged, and it comprises 1/2 of every transaction that exists all around the world. There's always a good or service or investment or something being exchanged for money. So money is the tool for wealth or value to be exchanged. And then number 3, a definition of money is that it's used to measure the value of something. Now, this one gets a little bit tricky because the only time an exchange is ever made is not when two parties value two things of equal value. Because if I equally value my $10 as well as I value a burger, I'm not going to spend that $10 on that burger. I'm only going to buy that burger for $10 if I value that burger more than I currently value my $10. I would rather have a full stomach than the $10 in my wallet. So my value of the burger is currently higher than my value of the $10. But on the flip side, the only reason that that restaurant would be selling burgers for $10 is if they viewed those $10 as higher value than the burger. Otherwise, why would they engage in a transaction? And so transactions only occur when both parties view exchanging the items and the money as beneficial for both parties. So that means that money, while it does operate as an objective measure of value, in reality and in transactions, it doesn't really work that way because the only time transactions happen is when value is perceived for the other item at more than the current item. But even with that being said, money does operate as providing a value, an objective measure of value to everyday items. All right, so that is money. What is an investment or an asset? Now, I say investment or asset because depending on the person talking, you're going to have different views of what constitutes an investment or an asset. But in my own definition, an investment or an asset is something that produces cash flow. If you're looking at stocks, that would be a dividend. Now, it's also something you own. So a CD is not necessarily an investment because the bank has loaned out that cash. In an emergency, they just might close down that CD, or the bank might have a run on the bank and you might not be able to get your money back. So an investment is something you own that produces cash flow for you, that produces income for you. A second feature of an investment is the potential for appreciation. But historically, up until about the 80s, that was not the number one thing investors ever looked for. Typically, when you would go to sit down with your financial advisor, if they were offering you a stock, the first thing you would ask is, what does it pay? What is the income? What is the dividend that it pays? Historically, that's what investors look for because that's the surest way to make sure that you're getting a return on your investment. You're actually earning income on your money. Which brings us to our third category of financial vehicles, which is a speculation. So I know a lot of people disagree with me on this, but if it doesn't provide income for you, it's really not an investment or an asset. It's just a speculation. Now, you can still make a lot of money with speculations. Buying a stock like Amazon, anytime over the past 20 years, you would have made a lot of money on it if you sell it. And that's the key. A speculation only makes you money if you sell it to somebody else for a higher price than what you bought it at. Now, if you continue to hold Amazon and let's say they start employing really bad business practices and tank all the way back down and eventually close their doors, well then ultimately you've made no money because they didn't pay you any income along the way. They never paid a dividend. They went up and they went down and closed their doors. But if something pays you income along the way, there's only a certain amount of time that you need to wait before you recoup your whole investment. Now, if you do own stocks that are growth stocks and they don't pay dividends, you can always use options like the covered call strategy, produce income on your stocks using options. If you're interested in learning how to do that, you can check out my options course. I'll link it in the description below. But other than that, if you own something that your only plan is to be able to sell it to somebody else at a higher price than what you bought it at someday, that's the only way you're going to make money on it. That's a speculation. Which brings us to currencies. Now, one more little detour before we start talking about Bitcoin and cryptocurrencies. Let's talk about fiat currencies. Now, fiat currencies is just a fancy name for every single currency in existence today. It's a paper money that is not redeemable or backed by anything of intrinsic value. There are some major problems. There are also still some advantages to fiat currencies. Some of the major problems are that it is continually inflated away, so its value is eroding day by day. And since there is a conflict of interest with the central bankers who create this money to create more of it without people knowing they're creating more of it, just like there always has been with currency debasement, it's very difficult to trust the inflation numbers that they themselves are putting out, especially when other private sources, just like the Chapwood Index, show that inflation is probably a lot higher than what the Federal Reserve and other central banks are putting out there. But even if their numbers are accurate, you're still losing a large amount of your purchasing power for every year that you hold on to those dollars. The value is being diluted. Now, the advantage to currencies like the dollar are that it is widely accepted and that you need to pay your taxes in your local currency. And so as long as taxes are due in a currency, there will always be some value to holding on to it, even if it's just to pay your taxes. And in fact, countless times throughout history, you see this happening over and over again, where the only reason people ever hold on to currencies is just to pay their taxes. But for all exchange and commerce and transactions, people are normally using black market currencies or gold or silver. Okay, so Bitcoin. Let's touch on the pros first, because there are a lot of good pros to Bitcoin that also apply to the other cryptocurrencies out there today as well. And my favorite advantage or pro to Bitcoin is that it is normalizing distrust of fiat. We have an entire generation now that is exposed to this idea of using money outside of the traditional fiat currencies through Bitcoin and other cryptocurrencies. And I think this is fantastic because for far too long, the public has been subject to the fraud of central banks without knowing it. And so the rise of Bitcoin and other cryptocurrencies is exposing more and more people to the fraud of fiat currencies that central banks are pushing on everyone. And the more people that know about it and understand it, the better. It's also normalizing the distrust of the banking monopoly, because with cryptocurrencies, you can operate outside of the banking monopoly. You can operate outside of the banking institutions. There would be no need to do this if there wasn't a legalized monopoly on banking through the Federal Reserve and the United States government. But because we can't trust banks and because of the fractional reserve system and the incentive to lever up and perform actions that are going to cause systemic risk and potential collapse of the overall financial system that make banks have to rely on bailouts by printing more and more money by the central bank like the Federal Reserve. And because we can't really do anything about it, one of my favorite advantages and pros to Bitcoin is that it is causing a normalization of distrust of this banking monopoly. More and more people in an entire generation is seeing the flaws in the system that is a legalized monopoly on banking. And so it offers a way around that, which again, long term, I think is only beneficial, and I think it's fantastic. Number 3, an advantage to Bitcoin is that exchange is getting easier and easier and easier as time goes on with it. More and more vendors, especially online, are accepting Bitcoin as payment. Now, there's a caveat with that. They're really not accepting Bitcoin as payment. The processors that these websites and companies use to accept Bitcoin, they're really not accepting Bitcoin. In the processing, it is exchanged for the local currency, and then they're receiving their local currency. So you're still spending the same amount of money you would either way, but you're just using your Bitcoin to do it. And so the more and more of these innovations that come along, the more normal it gets for exchange to happen in currencies other than fiat, which again, I think is a major advantage to the health of our financial economic systems long term. The 4th advantage to Bitcoin specifically, or pro to Bitcoin, is that it is advancing blockchain and cryptocurrency technology overall. Now, any amount of research that you do on blockchain or crypto will lead you to the same conclusion that most people have, that in the future, blockchain technology will be a foundation that most of the world will be built on. It's a fantastic invention with limitless applications. And so cryptocurrencies that use blockchain, like Bitcoin, are advancing this technology, normalizing it, making people more aware of it, and long-term innovations are good. Now, the last advantage to Bitcoin, the last pro to Bitcoin, is that it has a finite supply. There is no central banker that can just choose to create more Bitcoins. This does wonders for its potential long-term to hold value, because there is no eroding of its value by diluting the number of Bitcoins out there in existence. And so the finite supply of Bitcoins in circulation is a pro to using Bitcoin. So those are the 5 advantages or pros to Bitcoin and cryptocurrencies. It's normalizing the distrust of fiat. It's normalizing the distrust of the banking monopoly. Exchange is getting easier using cryptocurrencies and Bitcoin every day. It's advancing the technology and innovations in crypto and blockchain. And there's a finite supply of Bitcoin. So those are all pros. Now, what are the cons? Number 1, and probably the smallest con, is that there's a big potential for it to become illegal. Now, if it does become illegal, that will likely only further the distrust of the banking monopoly and the fiat currencies, but there is a potential that you might end up putting a lot of your wealth into something that you might not be able to use unless you want to break the law. There is big risk in that. The second disadvantage or con is security. And while at this point it does look like blockchain technology and Bitcoin is unhackable, it operates just like physical cash and gold in the fact that if somebody steals your key, they can use your Bitcoin and you can't do anything about it. There's no recourse. You can't have exchanges called back or returned. And so there's a security issue that exists with physical currency like dollar bills, as well as physical valuables like gold coins, that if somebody steals it, they can use it and you can't do anything about it. Now, the third con to Bitcoin, which is actually a fairly large one, is that there's a big potential that it is being manipulated heavily. Recently, there was a massive spike in the price of Bitcoin, and studies into it indicate that it might have just been one person manipulating the price of Bitcoin. Now, the way they would have done this is by using something called Tether. That's another cryptocurrency that is allegedly tied to dollar bills. The concern, though, is that there are not actually the same number of dollar bills backing up Tether as is being said. And so then if Tether can be manipulated and inflated and created more, then they can use that to buy Bitcoin, and they never had to use real money to get it in the first place. Now, that's as deep into the weeds as I will get with the mechanics of it, but there is the chance that there are large players in the Bitcoin field that are doing pump and dumps in order to manipulate the price and the value of Bitcoin. And once all the big money leaves and has made their money, there's a huge potential for large decreases in the price. Which brings me to my 4th and final con about Bitcoin: volatility. This is the number one reason to be skeptical about Bitcoin, is just how volatile the price of Bitcoin is. It's not like something like gold that maintains its value very steadily over long periods of time. In fact, it hasn't even been through a major financial crisis, because at the time of our last financial crisis, it was so new, most people didn't even know about it. And so the volatility, the chance that it could go up or down, such massive amounts in such short amounts of time is the number one reason why I don't have any money myself in Bitcoin. Now, again, it does follow some of the same patterns that other investments or speculations follow. And so it's possible to trade in and out of it using some of these technical patterns like head and shoulders, descending triangles, support and resistance. And so it does follow some of the same behavioral patterns that other investments and speculations follow. So I'm not saying it's impossible to make money, because if you would have bought Bitcoin a couple of weeks ago, right now you'd be sitting on some large gains. But volatility works both ways, and it could have a drop equal in magnitude to the gain that we just saw. So because of these cons or these disadvantages to Bitcoin, there's nothing indicating to me that Bitcoin is going to be the cryptocurrency of the future. There's a large chance that even state-owned currencies will be cryptocurrencies in the future. And so there's no good argument to be made at this point that Bitcoin is going to be the one in the future. Very well could be. And the early adopters are always rewarded when you adopt the successful thing early. Bitcoin today could be the Amazon of the .com bubble, but it could just as easily be the pets.com. Now, the final nail in the coffin for me on choosing a cryptocurrency early like Bitcoin is China. Now, China has been hoarding and stockpiling gold at record paces like never before seen in history. In fact, 2018 was the largest year on record for central banks to buy gold since the year we left the gold standard. And this has been led by China. Now, China has been very outspoken recently about cryptocurrencies and implementing blockchain technologies. And for many years, they've wanted to be the leader in innovative technologies like blockchain and 5G. Along with this, there are reports and studies that show there is a very good chance that very soon China, either by themselves or in conjunction with a few other countries like Russia, might release a cryptocurrency that is fully 100% backed and redeemable in gold. Now, this would, number one, get rid of some of the disadvantages of current cryptocurrencies, is that there's no intrinsic value. So having it backed up and redeemable in something like a commodity gives it intrinsic value. It also removes the disadvantage of cryptocurrencies of their volatility. If it's tied to something with stable value, then its own value will be very stable. And so because of this wild card of China or maybe even another country coming out with their own crypto that's redeemable or backed by gold, right now I'm staying out of the crypto markets. I'm watching them, I'm doing my research, but I don't have my money in them at this point. So I hope you learned something today. If you enjoyed the video, please like, please subscribe. I'm trying to get to 1,000 subscribers so that I can monetize the channel and continue to make videos like this for you. Thank you for watching. You guys have a great day.